Nice. Good morning, everyone. Welcome to another Sunday special with Jay, Helen, Adam, and unfortunately today Ross is missing, but he will be joining us next week again. And today is all about predictions for 2022. And we're gonna start as usual with Adam's supplement that comes out every morning on Saturday, and all the various predictions and various different aspects of everything that goes into predicting something go into it. So Adam, do you want to start us off with
The
what's in
cliff
supplement?
notes, the
Yes.
executive summary.
Exactly.
So for those who can't be bothered to read it, I don't think I should really, to be honest with you. But yeah, sure thing. I think
Well, do like
when
a Netflix kind of trailer type thing where you just like you say enough to get people interested to read it in full.
Teaser.
good point,
Whet the
good
appetite.
marketing. Where's the smoke and the mirrors and the pyro and all that other stuff that I need? And where's the shark? Where's the shark pens, Helen? Where's the shark pens? I've blown the gap there. Spoiler alert there. Next to the Santa hat. Next to the Santa. Well, one of the things that I said in there was I cracked one of my notoriously bad jokes a few weeks ago when someone said, what's going to happen to the market over the next couple of years? And I was like, it's going to go up 8.74%. But because I didn't put any little winky faces or laughing faces after it. Oh, we are 5 today after all.
We are 5 today.
Actually,
yes.
It's a bit like that time when Roy Hattersley was replaced on Have I Got News for You by a tub of lard. We've got Ross replaced by someone who'll contribute more value, I think, probably.
Did anyone else see my wife Mission Impossible into the room? Literally got in, ducked down, crawled along the floor. Sorry,
That was impressive.
Completely interrupted everything there. You're going to say hello?
That was impressive. It's worth being
Yeah,
interrupted for, definitely.
It is, and actually, this is Abby's Christmas present. I'm gonna send it because look, I found a shark. And it
Wow,
says
and it,
Oh, wow.
and not
Wow.
only that, it's a shark. It's a hammerhead shark.
It's a hammerhead shark.
exactly. I couldn't have manifested better.
You're going to get a present, Bubba.
I'm gonna send this from Malta. It might
She
take
bust-
2.5 years to arrive,
She
but
busts into this room just to get her chocolate buttons. And then she's off.
I'll get a massive big packet like that, hopefully.
big as she is.
Well, it is a sharer packet, but it just seems to be her eating it.
Yeah, so I was talking about the market. Well, I was trying to make a joke. The market would go up 8.74% because that sort of joke appeals to my mathematical brain, and no one could be stupid enough to make a prediction to 2 decimal places apart from anything else. But there is a bit of logic behind what I was saying, because what I'm thinking is that the heat that's been in there has not completely gone yet. The supply problems are not completely solved. The demand problems have not completely been satisfied. The excess demand, I suppose we should call it, to be economically correct. And there's still a few that want to move. And I think if you talk to a few agents at the moment, they'll tell you there's that kind of vicious circle situation on the ground where people aren't listing their houses because there's no houses to move to. And the agents have got a really tough job of kind of teasing that stock out of the woodwork. And of course, we spend a lot of time talking about the auction stock and the receivership stock and all the rest of it, because that's the relevant stuff to us. But we also recognize that's a really, really small part of the market. If the main market is not performing, if the market isn't functioning properly, then ultimately it's going to lead to that steam doesn't suddenly run out. And there's absolutely no reason. I put in the supplement this morning. I think that I've seen more illogical thinking that 2022 is going to be different from 2021 than I've seen at the end of any other year. It's like I appreciate the new broom sweeps clean. We also have a few resolutions. Most of them fall by the wayside by about the second week of January, I think the date is normally. But the problems that have been in the market are not fixed, and at the end of the year is effectively arbitrary. It's good to draw a line in the sand. I'm not knocking 12-month plans and all the rest of it. Absolutely, I'm a believer in that stuff. But if you have a really bad year, I remember once it was about 2010 or 2011. I think it was 2010. I had a really, really good year. In the first 2 weeks of 2011, I actually did better than I've ever done. And then over the rest of the course of that year, I then proceeded to lose all of that money and a bit more. This is when I was doing quite a lot of sports trading and options trading and stuff like that. And the fact is, it was the first 2 weeks could have gone into 2010 and made 2011 look like an even worse year, and 2010 look like an even better year. The question was, what was I doing wrong? And the answer to what I was doing wrong was I was trying to scale things too quickly and had fallen in foul of that old trap. Turnover is vanity, profit is sanity, and cash flow is reality. That's what I'd really done. But time is an arbitrary construct. So that's my philosophical curveball for the morning. If you guys want to pick the baton up and run with it.
Well, I'll pick up a little bit because it's an interesting situation when people says, December is like the end of the year, but in business, December isn't the end of the year. Like, is it, what does a tax year look like? What does your business's end year look like? Chances of it being December for your business, your end of it's unusual, right? So, it just tends to be just the end of a calendar year, and you can kind of figure out like, what have I achieved in this year, and you can put goals and things like that in place. But in reality, what your business has achieved, or whether your business or what your investments have achieved, it will probably be calculated in your end of year tax return figures, right? In which case, December is okay. The chances are you're probably going to file your taxes December, January, right? Or you would have done it a couple of months ago. But the reality is, December is as arbitrary as any other month. And in relation to figuring out what 2022 is going to do, I mean, you can make the standard predictions. There'll be 52 weeks, 12 months, 365 days. Days going to follow by night. There will be Monday to Sunday. All the standard elements are going to be there, right? Don't fret about what you can't control. That's the situation. Since we changed from the Julian to Gregorian or the other way around, that's reality. But there are some points that I think your post was really good on. But I think it's something that I think it was mentioned in one of the Partners in Property WhatsApp groups in the last couple of days, or it was kind of commented, but it kind of skirted the comment. But we still have a massive housing crisis, right? And a lot of governments really still do not like HMOs. You've got Article 4s popping up all over the gaff. And although HMOs are, they kind of supply the bottom market in terms of people not being able to afford houses or flats, and it gives, by and large, good housing standards or good living, good quality living accommodation. It doesn't actually solve the net issue, which is, last year or the year before, we were 300,000 homes short, or they promised to build 300,000 homes and they didn't. And what they've done instead is obviously labour costs have gone up. They could have really helped that, and obviously cost of materials have gone up. May or may not have been able to help that. But what's really gone up is actually the surcharges for doing new build developments. That's gone up. So it's making it harder and harder for development deals to stack, which means a lot less good quality, housing kind of is coming onto the market. Which, when you mentioned, Adam, the pinch or the rub is, existing housing stock. People aren't wanting to sell in this market because they haven't got anywhere to move to. Is right, because that's the pinch, that's the rub, that's where it's starting to fall down, in my view.
Yeah, I think the thing, you raised some really good points there, Jad. I think Birmingham is obviously the centre of the universe, but also the biggest local authority in Europe, and they were quite late to the party on the old HMO Article 4 stuff. There were many councils, particularly London-based, but around the country who were there faster than Birmingham were. But Article 4 is in place now, and now they seem to be going more quickly one step beyond, because the whispers are now they're looking to introduce the minimum room size of, I think it's 8 square meters. Now, I don't know And I don't know that the council have the data. I guess they probably do, or they should do, because the HMO license register. But that will obviously, rather than an Article 4 acting as a barrier to entry and offering people a bit of an advantage, it's actually going to take a number of rooms out of the equation if they go ahead with it. And presumably you would think make a number of HMOs unviable. Although, of course, once you've your average HMO of a certain size, certainly if we limited it to sui generis HMOs, let's say, you know, ultimately, if they're not of that certain size, then you're just going to lose the room. They're talking about the other thing that probably more damaging than the 8 square meter minimum. They're talking about a minimum of 5 square meters of communal space per person in the building. So that will probably drive some trends in a different direction as well, and maybe bring in some of the stuff that we've seen in student accommodation and in PBSA, bring it into HMO. But ultimately, of course, it'll put more pressure on rooms. And if there's scarcity of room rates, everybody knows what's going to happen. HMO landlords have already been facing rising electricity costs, rising gas costs this year. We're pretty sure they're going to be facing those next year. That's a damn, not quite as certain as Jay's Monday to Sunday, 52 weeks in the year, etc., but it's pretty much nailed on. And if you're going to take out, let's say that takes out 7% of the HMO room stock in Birmingham, I can't see it being, you know, less than 5, and it could be double digits. You know, I'm speculating, but that's a really, really significant a number, because it's such a massive local authority. The last time I checked the register was some time ago, but you know, there's obviously thousands, if not tens of thousands, of HMOs on the register in Birmingham City Council. So this is alongside some of the things they're doing with some of the social exempt landlords as well, because Birmingham historically has acted this kind of black hole to suck in all the social housing from neighbouring local authorities like Samwell, Dudley, brought people over from Warsaw, done lots and lots over the years on that. And now it's kind of saying, well, do you know what? Suddenly we've got a problem, surprise, surprise. And this is how we're going to go about addressing it and fixing it. And central government are putting pressure on in that area as well. So bit of a segue, but that could really hurt some people. And I think the important thing to think about, especially for people who are creating new HMOs, because I always meet lots of people whenever I go out to talk about property. There's always people in the room who are creating new HMOs. Some of this future proofing that needs to go on is around space and the size of the property that you're doing it in, because some people could really take a bit of a haircut if that's the direction of travel is to go for bigger stuff. You know, PD, changing the PD rights so things have got to be over 37 square meters this year. You know, that was a real biggie. You guys, especially London based, you know how many 15 to 30 square meter studios and flats there are that wouldn't
square meters. That would be a 2-bedroom flat.
Wouldn't be able to exist anymore. Yeah. So I mean, it's a big factor.
Just to kind of pull you up on something, did you pronounce Dudley correctly?
Depends to you or to someone from Dudley.
From Dudley. Yeah, I was expecting you to go Dudley, but you didn't.
You know that I'm from Solihull, dear boy, so we speak differently around here anyway. Nobody likes us. We don't care.
I thought for a minute you said Warsaw, pulling people in from Warsaw instead of Walsall. I was like, gosh, really? Wow.
No, I'm sure there was.
But the point about space is really interesting, because that makes the HMOs, or it's pushing toward the HMOs towards more like, Jay, the stuff that we looked at and the differentiation we made in the Property Investor Awards, that co-living is more, has more kind of communal space. Well, I don't know, maybe I'm just putting two and two together and not quite making 4. But if you're going to go down that, then it's a different type of clientele normally. And also I don't know, tend to be a premium for that. So it's really shifting. It's a very different product and very different, as you say, metrics. If somebody's got to cover the costs and trying to maintain the same margin on fewer rooms, more, unchargeable space, then that says increased prices for the existing rooms to me. But
and also sorry. I was just going to say, getting into the reality of it from a Birmingham perspective, ultimately, you know, there is absolutely that market that you're talking about that the co-living aims at, and the kind of same similar sort of market that build to rent tends to target if it's near to the city centre. But we all know the reality of HMO as well, as there's a big market of people who are there because of affordability.
Yeah.
So how is that going to be impacted? The Birmingham shared room rate on LHA is still £58 a week. Now, I don't want to go full Ian Duncan Smith here, but I mean, come off it. £58 and how are you going to deal it? What do you think you're getting for that? I bet you're not getting 5 square meters of communal space and an 8 square meter bedroom. Let's face it. So,
wow.
Well, I mean, I was about to say, probably just in slightly different colour. I was about to say, look, if you have to have those minimum room sizes and the communal space in some kind of co-living environment, because one of the reasons why we saw some of the co-living stuff on the Property Investor Awards was the returns were so much higher because the rents were so much higher. But then if you're making everyone do that, as you were saying, you hit an affordability curve really bloody quickly. Like we you know, a lot of the co-living stuff, it's really high standard. You know, there's normally like a pool table in there or an hockey table, whatever.
Yeah.
You know, it's fancy. There's like nice fixtures and finishings, and okay, there are investors doing brilliant jobs bringing that stuff to the market. But at the same time, you're looking at a far more muted, engagement on that, because there are the people who would look at the HMO room rate and go, well, what am I getting more? Well, okay, there's a living room. Well, I don't need a living room. I can just go to the park, or I can walk down the street, or I can sit in someone else's. You know, it's slightly different. And I wonder if these moves are going to start pricing. I think they'll price tenants out before they price investors out.
Yeah.
Yeah, and I also think like a lot of HMOs are like very much a transitory. Like basically, it's a transition period. You just live there for some time until like you move to your own house and you get family and you do things like that. Then like people like George just commented that they're looking to sell next year and it will be easy to sell. But then where do you buy something? And if you sell for good money, like you need probably as much to buy something else. Even though you have equity in your property, probably have to spend quite a lot more on your next move. So depends where you move from, where you move to. But I think a lot of people will face those kind of problems and the HMO problems and co-living problems, because those are like mostly young people problems or people who live and work in different location problem.
One of the fears that I had back in 2016 when I started moving out of the professional HMO market was that there'd be this race to the top, and I wasn't sort of reinventing the wheel. I was seeing that in the student sector and thinking, my goodness, things have moved on in 5 years, and will the next sector to see that? And this probably accelerates that even more, because you will be competing to provide all those things. But just think from an investor perspective, if you've already sunk in, 100K is a common figure that people have spent on a all en suite, all singing, all dancing, maybe extended, sometimes 150K. You might now be looking at another. It's not going to be looking at necessarily a small refurb to struggle to get the same money to create these communal spaces, to knock bedrooms together, move walls, do this, do that. If you've put bathrooms in, if you've got plumbing in, some of it's just not going to be viable. It's going to be. Some people will take a bit of a bath in. There's no two ways about it.
I mean, I think it comes down to how much of it is going to be retrospective, right? So if they're going to be bringing this new stuff in, maybe they're like, okay, so we've got this existing stock here. It's not feasible to cut and shut and do all that funny stuff there. So this 8 square meter rule is just coming in for new HMOs, new stock. And then the problem that you have actually is then does the old stock now become less mortgageable or less viable? Because that's what's happening, as you mentioned earlier on, Adam. A 30 square foot studio flat, if you're lucky in London, is now you struggle to mortgage that. So if they're now bringing in new size standards, does it reduce the fundability of older housing stock that doesn't meet the new regulations, and you're seeing that not in HMOs, but in other types of stock, 100%.
Yeah. We had a
comment.
We had a question, guys, from Dominic. It says, can the team clarify? We apparently need to build 300,000 a year due to demand and national shortage, but we're only building 100,000 a year. Why does the 300k home number statistic never seem to rise? Just come up on the screen just there. But I think, in my memory, and I don't remember when necessarily what years and things this has happened in, but that has risen quite a lot, because it was in the twos for a few years. Pre-COVID, I struggled to put times into perspective anymore. But it says, I just did a sneaky Google so I could sound cleverer than I am while I was reading that question. And interestingly enough, local authorities have got to deliver at least 95% of their target to pass the test for whether they're doing their housing delivery correctly according to their plans. If they deliver between 85 and 95%, they will need to develop an action plan to assess why they under-delivered and to remedy it. So what I'm reading into that is no big deal, quite frankly. So you can deliver 85% of your target with limited consequences. Councils that deliver between 75 and 85 will need to identify a buffer of 20% more land on top of their existing 5-year plan supply. So that is a really significant incentive, as well as developing the action plan. So you kind of see they're going to be needing to hit 85%. Otherwise, there will be some gloves off stuff. I was discussing a property with one of the Partners in Property members this week, and they were saying that there was quite a lot of land with it, and they were saying there was a scheme nearby that was to build 1,200 homes, which was quite a big deal because it's not semi-rural, I suppose, in between Birmingham and one of the outlying towns. But one of the problems in this country is ultimately that scheme is planned to take place over the next 15 years. So, as long as they're in the mix, I'm not sure on the maths and how when do those houses actually get counted? And in reality, when are they truly delivered? 20, 30, whatever, where requirements will just be off the chart. The only consistency I can see, Dominic, is that we fall short every year, and probably that the target isn't even big enough. And the actual additional, the marginal requirement gets bigger every year as well. So I can't remember how many. I've seen a couple of numbers over the years: 1.1 million behind, 1.9 million behind, and then I've seen other people say, "Well, there's no housing crisis," but the reality is the housing crisis is very specific types of stock in specific locations, and you can't fix that with a big broad brush of we must deliver 300,000 units. It should be we must deliver these units, and that's when you're down to the local authorities, and there's, should we say, significant gamesmanship often involved, and probably leave it there for political reasons.
Let the conspiracy theorists dig into that statement as there is their whim.
I've spent too much time having to go at people's mathematics this weekend as it's come to COVID. The dam's broken again, but I don't want us to go down that route today because it's just I'm walking away from the keyboard after this. That's me done for the weekend. So.
God, of all names to pick, they pick Omicron. I love it.
yeah.
It's brilliant. Did anyone used to watch a TV cartoon show called Futurama? Has anyone seen it? Anyone gonna know the reference? The aliens. I am Glurb from Omicron Persei 8. Every time I hear Omicron, I just think this guy. It's just obviously it's a Greek letter. It's a couple of other things as well, but they do come out with some really random ones, don't they?
I did like the fact that it's an anagram of moronic. That did make me chuckle. There are other undervalued Greek letters that could have been wheeled out here. I thought my Psy reference to Gangnam Style was some of my finest jokes work this morning.
I reread that bit. I was just that was a good piece of writing, that bit.
As long as I haven't offended the Greek reading contingent, then that's absolutely fine.
As chairperson of the Greek reading contingent, I think we're fine with that. don't know how many other members were watching, but I don't know. I quite like it. I think they should come out with like Epsilon next time. Really come out with some of the random ones. Everyone knows Alpha, Omega, Gamma, Beta, all that stuff. But
take it up a bit.
If they did go Kappa, you could buy a few shares, maybe. I just thought that might lift the brand. Although it might do what it did for Corona beer. So these things cut both ways, don't they? Realistically.
I think we just had another question come through from Joe. Let's have a look here.
Yeah. There you go.
Oh wow!
You want to lead it, Jay?
Heard a local council on the south coast counting new HMO rooms as part of their housing delivery test. Got their knuckles wrapped, apparently.
It's interesting, isn't it? Because it probably brings back to life the old individual banding per room argument. I mean, I think Piotr, Jay, we were together in Andrew Roberts' meet in 2019, and there was a talk from someone who had successfully challenged the room by room banding and got them to do it by floor, if I recall correctly, which I believe, as I understand it, when I read up about it afterwards, is probably the correct application of the law. Not that necessarily matters at local authority fine level, but that was, and I think there's probably quite a few people who could go back and challenge their valuations on that basis. So it wasn't overly damaging, and it probably does a similar thing to, I know that people have lobbied over the years that the fairest solution would probably be to have an individual room council tax banding rather than band, as in there's a shared, a bit like the LHA rate really, there's a shared room rate for council tax, which would be a fairer way of applying it, although then they might make the minimum room size 11 square meters and then you have to pay for all your rooms. So
well, I mean, it's almost, you don't really get a buy-to-let mortgage with an HMO. You more often than not, you're getting a commercial financing solution. So it's almost, it's almost akin to like a commercial property. So you could probably argue you could get commercial property rates, which would actually be really bloody cheap, because you only for your A style space, which is your first 3 or 5 meters on your frontage, is going to be expensive. Then everything going back and above is pretty much any floors above the ground floor are ancillary, which are pretty much not rateable for the class use.
Mate, if you were a practicing lawyer, I'd accuse you right now of drumming up some work for yourself. But there's a pretty good argument there, isn't there? There's a pretty good argument there.
Just a little bit. I mean, it turns it a little bit on its head, and I imagine the investors would enjoy it. I don't imagine the local councils would enjoy it, because people forget that a lot of these taxes, they pay for services. They make sure the roads are tarmac. They do things like that. Keep the lighting on the what's the word I'm looking for? Completely gone out of my head. Lamppost. Keep the lamppost lit and things like that. It was terrible. So there is a function to society for it, but I think it all comes down to is the current measurement fit for purpose? Is it fair and reasonable? And I think the individual room rating is probably not fit for purpose and not really fair.
Well, the argument apparently is that there should also be commercial EPCs for communal areas in HMO. Apparently, that's the correct application of the law. I don't know, because I haven't looked into it, because it doesn't apply to me. But that
does make sense.
They do sometimes. I think it varies LA by LA, but they do sometimes make people have commercial waste contracts as well, rather than collecting on the basis of the council tax. So there's a bit of mission creep in there that starts to support that line of things. But then there was that piece of journalism that came out a couple of weeks ago that was saying, well, apparently in SA they're going to be looking at stopping people moving over to business rates for SA. So this is a pretty typical sort of manifestation of when you're involved in a niche strategy and the things you might have to deal with. Ultimately, the big benefit of buy to let is the whole too big to fail side of it, I've always thought, and that is ultimately what protects against almost anything other than a Jeremy Corbyn, who'd be the worst variant of all time. It's the thing that protects, I think, against almost anything. And as it gets more corporatized, the protection gets bigger and better because the lobbying is there. And we can imagine the conversations that are going on at the moment at the governmental level to entice more banks, more insurance companies, more everybody else into the market to deliver. It might be going back to Dominic's question. It's probably the only way they can hit some of these units. But going back to my point, it won't be the type of units that we need. It won't be the type of units that stack up to build well, which inevitably are apartments. It's like John Lewis. I love the company John Lewis. I admire them very, very greatly, and I think they're a really good example of the good faith of capitalism. But does Solihull or insert other John Lewis location here really need another 42 top class executive 2-bedroom apartments overlooking the church? Probably not realistically, but that's what they'll get from John Lewis.
Yeah.
I know we mentioned it in passing. I think it was last week or the week before about Lloyds Bank becoming a landlord and this, that, and the other. About like a big bank kind of stepping in as not just being a facilitator but actually being a provider. And there was something that you just said there that kind of I kind of thought, well, actually, if a powerhouse like Lloyds started lobbying government saying actually these side standards are ridiculous, this, that, and the other, they've got far bigger teeth than the landlord association or whatever it's called, or anyone else really. So you kind of it's like you say, a lot of these things are double-edged swords, right? If they did call it Kappa, would you go and start plowing a lot of your pension into Kappa shares? But you don't know if it's going to do a Corona beer and go the complete opposite way. In the same way, you don't know if Lloyd's Housing Group, whatever they're going to call themselves, are going to produce quality housing, or if they're going to lobby the right way or lobby the wrong way. For the everyman, investor that you have on the street. So it's going to be very interesting.
I think for the mum and pop landlord, I mean, the thing is, I've done some maths. It won't surprise anybody to know, but I've done some maths on how much existing landlords have put the rent up over the course of the pandemic and how much new rents are going up. And that void is utterly unbelievable. So given that we've had a 5% plus inflation let's stick with official figures, regardless of their usefulness or not in the real world, especially to property at the moment. But, new rents are up double digits in a lot of the parts of the UK, new tenancies. Whereas when you throw in the existing as well, the existing have gone up less than 0.5% since the start of the pandemic. That's the mathematical conclusion that I've drawn from using the ONS figures. So landlords don't put rents up. That's one point. They don't put rents up at existing tenancies.
Yeah, but one thing is, like, landlords usually don't measure the rents against the inflation. They just measure the rent against what they are paying, right? And in terms of mortgages,
fair point,
so if you have a £500 mortgage and you keep getting £1,000 rent, and that's all your costs, like until you do a refurbishment or something like that, then it kind of like your income stays the same, and then for landlords the value of the properties go up, the capital value goes up, right?
But you can't eat paper, and if you've got to do EICRs, for example, then this is the problem that a lot of landlords have. And a lot of the stock that we've bought this year has been, there's a £2,000 quote to fix the EICR. I can't fix it, but I haven't put the rent up for 10 years because it comes back to that point of they're not business-like. And ultimately, because they're not holding a reserve fund. They're not doing the things that corporations will do. And they then end up having to bow out of the market because they can't afford. That's stupid. And you know how many landlords are in that situation. They're asset-rich, cash poor. They're sitting on big gains, but they might be sitting on big latent tax bills when they cash those gains in. That might be a problem if you've remortgaged over the years and you've taken out a lot of the equity, because you're faced in a situation where you sell it, you lose all of your uplift in tax because you've had the money over the last 20 years. And then so if you're making a small amount per month, it's okay. But we see way more landlords in genuine financial distress, and it is due to their own mismanagement. Don't get me wrong, there's no two ways about that. But they're in financial distress because they're not carrying reserve funds, they can't raise capital, and then they're going to lose 10 grand because they can't raise a grand. They're going to lose 20 grand because they can't raise a grand. It's as simple as that. But Vicky threw in a cracking question there, and a point. So I think I'm right in saying, Vicky will correct me if I'm wrong if she's still listening. I think Liverpool were the first to introduce a massive selective licensing scheme, and I think it was back in 2015. And it was a bit of a joke. It was 600 or 700 quid per property. And they didn't get round and inspect some of them, even in the whole 5-year time period that they had to do so. They were then banned from doing it again. They wanted to just roll it over and do it again. They were stopped from doing that. And of course, in the interim, and I don't know the case in detail, I know there were quite a few people who didn't come out in the best light in it, but the local authority basically was going bankrupt as well. They've now come back and said they want another additional selective licensing scheme. You know, selective licensing, this is it's a bit like, makes me feel a bit like Section 21. You know, landlords use Section 21 as a no-fault eviction when there's fault there. You know, we don't do that, and we haven't done that for a couple of years, because I was doing the same as everybody else. I was thinking, this isn't right. We should be using it's always Section 8, and it's always Ground 8 for rent arrears. Let's face it, there's almost never another time when a professional landlord will want to evict anybody. 1 in 1,000 cases are probably not that. And then when they take Section 21 away, we'll all be doing that anyway, which is probably how it should be if it's followed with CCJs and all the rest of it. But it's the same when a council uses a selective licensing scheme in a totally non-selective way. This is going to be covering 80 to 85% of the city of the PRS in Liverpool. And, you know, thinking about that, we're chucking in the EPCs at grade C. She asked, what's the group's view on regulations which seem to want to force landlords out of the PRS? I've got a fair ton to say on this, but I think I should let someone else speak for a bit because...
Well, no, you seem to know a little bit more about the Liverpool game than probably the rest of us, actually. So keep digging, keep going.
Okay. Well, I think, I mean, the wider view around forcing people out of the PRS, we kind of touched upon before, haven't we? George Osborne's master plan. You know, I think that those chickens are coming home to. I have a tendency to see things and jump on the wagon early and then jump off early as well. That's just the way that maybe it's just because I've got attention deficit disorder or whatever it is. But I think, you know, I was saying in 2015, 2016, this is going to push rents up. Just that simple economic argument, price elasticity of demand, ultimately cost of supply. A bit like what I was just saying to Piotr there, when the EICRs come in, if it's another X, a majority of that will be passed over to the tenant, because the supply is weak, and you know the elasticity, it's inelastic. Rental stock is inelastic. That much has been proven over the years. So 60 to 80% of the cost of all of these things gets passed on to the tenant. Maybe not straight away, but it does do. And as time goes on, that's going to be even more and more. So to address like Vicky's comments turn by turn, the EPC grade C in your Victorian terraces is actually not as much of a big deal as everybody thinks. Not too much has to be done on the mid terraces in order to make it stack up. And you're normally okay with internal wall insulation. Now, they never say that on the EPC because they're only recommending external wall, which is problematic, certainly in parts of Liverpool where there's conservation areas just like there are everywhere else. And there'll be a planning department that don't want externally insulated houses. And they're still quoting £8,000, £10,000 to do the two walls. You don't need that. You can probably get away with 1,500 quid on the inside if you batten the walls out. Now, that's going to make the room smaller. So if it's an HMO, it pertains to the conversation we had earlier. So you're going to get caught sort of one way or another potentially. But the end terraces are slightly different because obviously they've got that third external wall. And that's why, and I'm sure Piotr and Jay can back this up, you see a lot more end terraces in auction than you do like proportionately compared to mid terraces, you know, and it's often mortgageability problems, single skin gable end walls,
structural defects,
misinformation sometimes, and they're often disposed of through auction for that reason. A lot of people don't really realise that, and then, although having said that, I quite like them because they are financeable, and like everything else, it depends if someone else has worked that out or not. Realistically, you know, that's what it comes down to. But you know, I think the idea of using selective licensing non-selectively is a nonsense. Selective licensing, when it applies to half a dozen or a dozen streets, which is what it was, typical piece of legislation, that's what it was brought about for. It is proven to have an effect on a small area over time. But if you completely bastardize it, and that's what they've done, then guess what? It doesn't work at all. They're talking about doing it in Birmingham on a similar scale, Vicky, which they think will raise about 100 million quid for the local authority. Now, they've already mandated that the LA can't profit from this, that everybody knows they can move their accounting around enough to make it look like they're not profiting from it when they're profiting absolutely bloody massively from it. So I actually think England, and for those who are aware of Rent Smart Wales in Wales, and the Scottish Landlords Registration Scheme in Scotland, they already have nationwide licensing, effectively, registration. It's cheap, it's reasonable, it's fair, and actually those organisations do enforce to a reasonable level. Rent Smart Wales has done some good work already. They're not perfect. They've got loads and loads more work to do, but they have brought things forward. And England will have a nationwide licensing scheme, and everybody will go absolutely mad about it. But when it comes in, it'll probably be 50 quid a property a year or something like that, not £700 for a property because it happens to be in Liverpool, payable up front. And again, comes back to the asset rich, cash poor. If you've got a struggling portfolio of 25 LHA DSS tenanted properties in Liverpool, and you know your rents are dead low, local authority housing allowances artificially low ultimately, and then you suddenly get a demand for 25 times 700, what are you going to do? You know, you need to get a personal loan to pay that off. You probably haven't got it. So what happens then? Well, the housing is not provided, and what happens then? It doesn't help anybody. It doesn't help anybody. So it's an utter nonsense. But if you listen to the big corporates, and you listen to the funds, and you listen to the people who are getting involved in this game, and they'll talk freely, which is quite rare. They won't do it in public, but they will do if you get them in a room and talk privately. They'll tell you that they welcome regulation. They love regulation because it's a barrier to entry. Yeah. And they don't struggle. It's 0.something% of their cost base to comply with this stuff. It pushes me and you out, potentially, unless it's the go big or go home thing. I've been saying it 6.5 years. George Osborne's biggest memo, apart from basically sticking his middle finger up at the landlord, was go big or go home. That's what it was. And it's still the case. And it will be the case for the whole time that we're in this game, because it's going to take a decade or more to switch over from mum and pop landlord to institution. Probably 20 years, probably.
Yeah.
That's right.
Rant over.
Good quality rantage there, sir. Chuck didn't bastardize. I'm proud of you. At least I'm not the only one here. I'm not the only one here with a potty mouth. Thank you.
That's fine. This is a good comment as well. So glad I have commercial tenants. It's really awesome. So negative and hard work. We do love commercial tenants as well. And in fact, like most of the deals, if we're looking at something, we just look at how we could just retain the commercial property rather than keeping the commercial. And it's one deal we're looking in right now in sort of like in a pretty town in the northwest, where it's 2 commercial units. Actually, it's 3 commercial units, but one gets sold off straight away. And then there is like basically a PD conversion on the upper parts, and those will be sold off, and then just commercial units kind of potentially held on to, which is the ideal kind of solution. Because let's be honest, it's nice not to get calls about broken boilers from commercial tenants, and it's nice they get on with things and they just like pay the rent, and that's it. And they are creative and resourceful enough to deal with whatever they need to deal with.
I think the commercial landlords have got their mojo back after. On the flip side of that, I had a conversation. I was trying to buy a building from a big commercial landlord who's actually got a listed vehicle these days, and it was 3 shops with uppers, and the uppers were actually leased on a long lease to a care provider. So it was quite a commercial approach to the resi as well, as you might expect. And he said to me very candidly on the phone, he said, I wish we'd stuck with our resi portfolio because we took an absolute beating last year because of some of the big covenants who didn't pay. And I know from speaking to Andrew directly that he's been well looked after and his tenants have paid. And generally speaking, our commercial experience has been similar. And in a very perverse way, the mum and pop style smaller commercial tenants have been decent, whereas some of them, I think probably Primark were the most obscene in that they were sitting on hundreds of millions in cash and still saying, not paying the rent, guys, not paying the rent, and you've still got your moratorium until March 2022. And I think we've got a couple of viewers who've got some decent commercial portfolios, and the size, I mean, I suppose what really has gone up, although it's always been relatively desirable, but government healthcare or government related contracts are also extremely attractive, and you can get some ridiculously cheap financing against those sorts of things if you can find them. And they don't necessarily need huge buildings anymore, because people like the DWP have kind of devolved to looking at local setups quite a bit, which can be a really, if you can get them in, you want to be waving at them like this, saying, come on, get them in, because they're just obviously a fantastic covenant to have, because we all know the government can't go bankrupt, although maybe we shouldn't talk too much about that one. But
well, I mean, the truth is they do, but the way they get funding externally kind of prevents that from coming to the fore. They live continually bankrupt. Yeah. That's it. A couple of trillion. You know, what's that between friends, right? That's normally the standard debt level. But if we let you off the leash on that, could we be here till next Sunday without taking breath? But I've completely forgot what I was going to say, just to have that little dig at you. That's completely screwed myself over there. Magical. All right, I'm going to shut up again. Brilliant conversation.
Dominic's put another comment up about that he shared from Tim Bishop about HMOs, and that is a very good point. We have mentioned this point before. There is this spike of 18 to 30-year-olds coming over the next decade, and obviously there's a lot of HMO in there. There's also just a lot of renters in that demographic, apart from anything else. So this is another thing that, if you look at why house prices have spiked over the last couple of years, there's a similar situation coming here with everything they're saying, isn't there? The PR, just going back to Vicky's question, the PRS has actually shrunk over the last 3 years. It's not something that's getting publicised particularly, not by massive amounts, but it's going down by 0.3%, 0.4%, and the demand is growing. So you've got exactly the mirror of the situation in new build housing stock. The new rental stock's not coming to market. You know, there's fewer auction stock, which we've all attested to over the last couple of years, which means fewer refurbs and fewer things coming out of the back end as new tenancies. And if there's this big bump of 18 to 30-year-olds coming, which of course is a known, because we know what age they all are today, and we assume they're not leaving the country in droves. Although it depends how we go with our vaccine mandates and things like that. But I'm not going to start on that one either, because otherwise we'll be here for 2 weeks. But yeah, there's a very good chance of there being demand. But I think the problem is that the local authority situation causes a problem, because they don't really care about that at that level. They see it as HMO is there to be taxed or got rid of, and HMO causes problems to them, and they don't like it. And that's ultimately, you know, I was talking to someone yesterday who was saying they're giving up their office in Solihull and they're going to change to have one in the centre of town. I thought that was interesting at the moment. And he was like, yeah, you know, he's quite senior. He was pretty hacked off about it, because to get into the centre of Birmingham for him is probably an hour and a half each way, even though it's only about 12 miles. Whereas to get to get to the office in Solihull was nice leafy 10-minute drive, you know, park the Tesla outside or whatever. So, and he said, but the reason why we're doing it is all of the seniors don't want and don't need to go into the office, but the junior staff, they're in rentals, they haven't got the room to work from home. They're working out of a flat. There's 2 of them. They're in house shares. They can't work from home in a house share. Or perhaps I've seen some clever co-living solutions. You guys will have seen more about actually possibilities of working from home, and you can have a mini Regus style setup whereby it can be done, although it depends how much you're on the phone, and if your voice is a foghorn like mine, that's probably also makes it quite annoying for your housemate.
But I can't live in a setup like this where it's like it's a building with like over 100 flats, and there's like a co-working space here, there's a bit of a gym, there's a roof terrace, there is basically everything. I don't have to move much, and I can just move into different spaces. So it's definitely like kind of a way forward, but also they're kind of, you kind of like want to go out and want to do things in different places. It's good for some time, but I don't think it's a long-term type solution for everything.
Well, there'll be mental health considerations to doing that, I suppose. What's the sort of capacity utilization, Piotr, of that roughly? You know, is it not lightly much used? Is it
not much really? Like there's like spaces with sofas and TVs, communal spaces, about 7 of those spaces here, and pretty much you can always choose where you want to sit, what you want to do, and there isn't many people kind of using them. I guess now I mean the COVID regulations and stuff aren't that kind of helpful, but at the same time people do like to spend time in their own space.
Interesting.
Yeah.
So Sue made a comment saying Section 24 is a very clever tax on the tenant. The government overtly courts the tenant to vote, whilst covertly taxing them via higher rents. It's absolutely true. You know, it really is a lose-lose situation, because ultimately, you know, taxation is inefficient, and if you want more money, you might have to. We know we're going to lose 40+ billion quid's worth of excise duty at some point in the next 10 years, because people aren't going to be buying petrol and diesel anymore. So that has to be made up for. If you make it up on VAT, the trouble is it hits the poorest people in society the hardest. Well, that would be an obvious place to go to potentially get that, because if we all paid, I can't remember the last time I saw a figure for what realistic road tax would be, but I think it'd be about $2,500 a vehicle, and HGVs would be paying, you know, 20-30 times that per vehicle per year because of how much stress they put on roads. And I don't know if I mentioned it the other week, but I remember 20 years ago it was quoted at £1 million to build a mile of motorway. It's now quoted at £20 million to build a mile of motorway. So that's how ridiculous it is. But it's so true. It's a really inefficient tax that's really horrible, really insidious, and really was, to me, was just the flag of where things were going, and that direction is going to continue. You've got to be battle harder. Andrew is right in what he says. You know, Resi all sounds so negative, but I'm not negative about it. I'm super positive about it, because the harder it gets, the better it gets. The margins are decent. As Piotr said, you said, Piotr, about the mortgage people are paying so they don't feel they need to put the rent up. And the reality is people are paying lower mortgages. And even with a backdrop of probably rising interest rates, some of the rates have still been coming down because there's been so much margin in the limited company buy to let. But they've kind of started waving the white flag on that now and saying, okay, there isn't really any reason why we should charge you any more for having it in a limited company. And now we've gone under 3% on 5 years. The margin squeeze is going to continue on that front as well, you know. So there is that side of it. Incredibly cheap leverage, genuine returns. And I think anybody sensible has a nice mixed portfolio. And mixed commercial units can be fantastic to hold on to, or to do what you guys are saying and sort of, you know, chop up and sell and hold a couple if you want to, hold the commercials, whatever. There's so much flex, and the stamp duty regime is so much kinder, and there's so many fewer people at auction to buy that sort of stuff compared to knackered 2 up, 2 down that everyone will overpay for every time, you know. So There's tons to like about that sort of stock. I love it. We've got a few on the go at the moment for exactly that reason. Yeah, it's super.
Well, there was a lot of negativity when COVID, the first lockdown kicked off about, the high street's now dead. No one's going to go back to it. Offices are now dead. No one's going to go back to it. And all this stuff. And I think all the way through, we were still quite gung-ho. Like, no, we're still looking for, shops and tops or shops and uppers, whatever people prefer to call them. Because actually, the chances are if you're not going to split them up and sell them off, you get a blended income from commercial rate and resi rate, which is always a nice blended income there. You get a little bit of hedging security against the commercial goes vacant, the resi is unlikely to go vacant at the same time. The resi goes vacant, chances are you've still got commercial there. It's a nice safe asset. Again, you're not going to want 100% portfolio of stock like that, but it's a nice asset class to have and to own.
I think it's nice for sort of our level, our viewership base, and all the rest of it as well, because big funds don't want that sort of stuff. They don't want the hassle. They don't want the mixed nature of it. There is, like you said, there isn't loads to get your head around on that really, but they look at it and go, ugh, asset management, bleh, can't be bothered with that. Resi tenants don't want bleh. Anything where there's an opportunity to get involved in stuff that's really not that difficult, just needs outsourcing to the right people if you want to do it or whatever. It's not a problem, but it's moving parts for not massive returns. So the bigger companies just go, not bothering any of that.
It becomes itty and bitty in two ways. Like you say, it's too itty bitty for the big boys.
Yeah.
And then for some of the beginners and starter outers, it's too itty bitty because there's concern that they don't know enough about commercial relationships in terms of the leases and the responsibilities. People understand the resi so much easier. And I think you kind of want to be in a bit of a middle space. You want to be mature enough as an investor and as a property person to get involved in it, but you're not going to have a great deal of competition from people too far down the rung, in the same way you're not going to get battered by a price by people too high up. So it is kind of that nice little middle ground section there. But then again, a lot of those people in that section are still looking at, resi portfolioing or larger HMOs, or maybe moving into developments. A lot of people are moving away from that commercial high street side of things. So it's a little bit of it's perfectly positioned if you're in the right kind of mind.
Well, I say to people all the time, don't necessarily believe you've got to convert the downstairs in a commercial unit, because it may well be able to be worth a similar amount of money. It depends where you are in the country. But there isn't always that uplift for the downstairs that there is for the uppers. The uplift for the uppers is normally there, and it's normally relatively easy work to do as well. Whereas the downstairs doesn't necessarily need too much. Although if you can nibble in a flat at the back, it normally is a pretty good value add, But let's face it, Jay, the high street has been dead more times than there's been a new world order. And I've lost count of how many new world orders we're on, but no more conspiracy references today. That's me.
Brilliant. Well, we just reached 11 o'clock, so let's start wrapping this up. And there's been some great interactions today. Thanks everyone for the comments. I think it makes this chat much more interesting when people contribute, and we've got fuel to basically feed Adam with new things to comment on, and feel his 80% of the time.
I think it's the first week I've done my contractual obligation. Actually,
it is, to be fair. It is.
I may have gone slightly above. it.
It was more like it was 80.74, so he was literally just over.
Well, that's what happens where Ross is missing the natural kind of counterweight for the English voices.
Well, we haven't really talked about what we plan to at all, but it's been brilliant. Like you say, thanks to everyone for the contributions. It's been awesome.
Yes, it's been really good. Yeah, thanks guys for watching, commenting, and if you like this and you want other people to watch it, then share this with on your Facebook, LinkedIn, YouTube, or whatever. Click subscribe, like whatever, whatever you feel appropriate.
Give blood. Back next week for the anti-penultimate session. Fantastic.
Yes, right. Yes.
Pre-penultimate.
Nice one, guys. Have a good Sunday.
Guys.
Speak soon.
Take care, everyone.